Welcome to Brian's CPA review on CFE and Core. Today, we are going to review ASPE 3056, Interest in Joint Arrangement. The parties that have joint control of the arrangement have rights and obligations. We must determine ways to treat joint arrangements in the language of accounting. What is joint arrangement? Joint arrangement is a contractual agreement whereby two or more investors jointly control the economic activity. For example, this can be done by having a contract or article of incorporation. Joint control. Joint control is contractually sharing entities' strategic operating, investing, and financing policies. It is when two or more companies or persons have the ability to exercise influence over a company. Keep in mind that none of the investors have unilateral control. Recognition of joint control. For recognition, there are three types of joint controls. Jointly operated operations, when two or more investors combine jointly to make a particular product. For example, it can be a separate legal entity or jointly entering into a contract to create a product or deliver service. Jointly control assets. This is similar to jointly control operations, except the assets are contributed for a joint control. For example, two companies are jointly controlling an asset on a sharing basis. Jointly control enterprises. It is when separate enterprise in which investor has interest. For example, two or more investors create a new enterprise to control jointly. For initial recognition, jointly controlled operations have balance sheet, which assets it controls and liability as incurring. Income statement is shared percentage of revenue and expenses. For jointly controlled assets, have balance sheet share of jointly controlled assets and liability. Income statement is also shared percentage of revenue and expenses. Jointly controlled enterprises, investors can choose either equity method or cost method. Let's consider a scenario for understanding joint control. Jane owns a cornfield. She has been harvesting corn for generations. Jane sells corn to processing plant to be ready for sale for distribution. William is a farm equipment mechanic. Jane and William sign a contract to jointly own corn to be harvested. Corns are joint asset controlled by Jane and William. The contract states that Jane and William shares profit from the corn sale. Jane and William both recorded corn as asset in the balance sheet. For classification of joint arrangement, right and obligation criteria must be considered. If any of the criteria are met, it is considered jointly controlled operations or jointly controlled asset. If none are met, it is jointly controlled enterprise. Do investors have rights to assets and liabilities legally? Do the investors have rights to assets and liabilities per contract? Parties design the arrangement to have substantially all of the economic benefits. For example, A boutique hotel in Montreal is hosting an annual gala for Canada's 150-year celebration. A restaurant called The Medium Cook and cutlery rental company Party Rental Business entered a contract to deliver meal experiences for attendees. The contract states that Medium Cook and Party Rental Business to split profit by 80 to 20. The hotel offered to pay 20% of donation from the gala, which will be distributed to these two companies. The Medium Cook and Party Rental Business are using their resources jointly to deliver a product. In this case, to meal serving at the hotel in Montreal. It is jointly controlled operations because two or more investors combine jointly to make a particular product. We can also consider the classification for the type of joint control. The second criteria, parties design the arrangement to have substantially all of the economic benefits. The rights and obligation criteria is met. Both Medium Cook and Party Rental Business can record revenue on an agreed share basis in the income statement. In summary, joint arrangement is a contractual agreement whereby two or more investors jointly control the economic activity. There are three types: jointly controlled operations, JCO, jointly controlled assets, JCA, and jointly controlled enterprises, JCE. Consider classification criteria to see whether it's a JCO or JCA or JCE. That's it for the review of interest in joint arrangement under ASPE 3056. I hope this lesson was helpful for your studies, and feel free to contact me if you have any questions. And remember, it's important to understand the concepts before doing as much practice as you can. Have a great day and happy studying!